that, it is my pleasure to invite Mr. Chandrashekhar ji, who will take us through the macroeconomic landscape shaping the metal market, including currency trends, global growth signals, and their implications for zinc. Chandrashekhar ji, over to you.
Thank you, Beenaji, for this welcome. And I'm actually honored to be in this part of this elite panel with very, very distinguished personalities like our friend Pugarindi and, of course, Ronak and Maya. Such a delight. Just give me one moment. I'll share my presentation, which is here. Share. Okay, it's here. Can we go to, okay. We're going to the full screen, yes. Okay, yeah. So let's discuss the global drivers and impact on the zinc market. Let me start by discussing the macroeconomic backdrop. I'll just wind back to early 2026, say January 2026. We had some key themes for the year 2026 for global commodity markets. Then just wind back, okay, it is important. Then very cautious optimism as far as global economic outlook was concerned. The US president in 2025 had imposed a series of tariffs on countries and on products. But after the US signed trade deals with South Korea, with Japan, with Vietnam, the sense prevailed early this year that the tariff risks were abating. That was a very clear signal. Following that, the global trade risk, the tariffs had upended the global trade in 2025. The trade risks were also seen to be much less threatening early 2026 than they were in 2025. Liquidity conditions were expected to be favorable, and more important, Fed rate cut. The expectation of a very moderate rate cut and not a sharp rate cut, but a fairly 2 or 3 rate cuts during 2026. It was also expected that the US dollar will post fairly modest gains, and the carry trade in US dollar would take a backseat. More importantly, from a commodity perspective, obviously, there was expectation and enough evidence that the crude oil market would be in a state of oversupply in 2026. And we all know how Brent was trading at around $60, $61, $62 a barrel early this year, say in January. More important also was the anticipated acceleration of energy transition, which by definition is highly metals intensive. And we also discussed the global growth possibilities. Global GDP growth was forecast to be around 3% for 2026, with China growing at 4.5%, expected growth of 4.5%, and the US most likely a little over 2%. This is kind of prospects that we had seen earlier this year. And AI, the artificial intelligence, I call that a known unknown. There was a big debate, and it still continues. Is AI going to be a shock absorber, or is it going to be a shock magnifier? We still don't know. We still don't know. That's the honest answer. Therefore, these were the thoughts that were buffeting everyone's minds early this year in January. And then everything changed. Everything changed. Everything changed from 28th of February and, of course, the whole of March. The US-Israel combined attack on Iran has changed a lot of these expectations. And it has actually elevated the sense of uncertainty. And continued military action in the Persian Gulf region, the whole of March, even until recently, obviously has left a major impact on commodity markets and, of course, on global growth momentum. The momentum is very clearly seen as slowing. The most important outcome of this military action as we all know, is of course the energy market that faced massive supply distortion. From a situation of oversupply that we saw early January, the picture changed completely. Energy prices started to rise, whereas oil, crude oil or gas prices have risen very, very substantially. That is leading to inflation. That is leading to expectations that interest rate will not decline in a hurry. That is leading to a certain slowdown in anticipated growth for 2026. There is a lot of what I would call collateral damage from the war in the Persian Gulf region. And we have a certain truce, a certain ceasefire which has been declared. But my own sense is that it's an extremely fragile truce. It's simply not clear at all how long this conflict is going to last, and what would be the outcome and what will be the eventual impact. We still don't know. The conditions are stable, and that unstable conditions are likely to continue into the foreseeable future, in my opinion. Therefore, and then you look at the role of China, look at the role of Russia in all of this, and we don't know whether this is going to trigger a new global order. I don't know, to be honest, but we should not be surprised if this conflict in the Persian Gulf region has set people rethinking on the global order. And is there a possibility of a fracturing of the world, and then the nations moving towards 2 or 3 different axes? We don't know, but that's a looming threat or looming risk which we need to recognize. Whether it will happen, how soon it will happen, timing, it is very, very difficult to state, but the risks are certainly looming. There is absolutely no doubt at all. So it is in this backdrop of geopolitical instability and geoeconomic uncertainty that we need to look at the zinc market, for which we are assembled here today. Now, the zinc market, very quickly to recap what happened in 2025. All of us know, of course, the critical role of zinc as an input for galvanizing steel, which is used in multiple sectors, infrastructure, construction, automotive, etc., and therefore that makes zinc an extremely critical material for these sectors. Now, in 2025, the global metals markets posted very, very strong gains, and then we saw how LME index rose up more than 20% from January to December 25. The growth was more than 20%. But remember, not all metals contributed to that spike in. It was largely driven by copper and aluminium. I found, and I'm sure our friends also would know, that zinc and lead were actually the laggards in that increase in LME index over 2025. The International Lead and Zinc Study Group also mentioned that production would be up by 5.4%, refined production would be up by 2.1%, and that the refined usage would be up by 1.9%, etc. I'm not reading those numbers. All those numbers are available. And it was also stated that the zinc market showed a 33,000 ton deficit. And the proof of that, as evidence of that, and to support that, it was also said that inventories at the LME and of course in Shanghai actually decreased about 77,000 tons, etc. This is the situation in 2025. So what's going to happen in 2026 is what we will discuss now. In January, given that was projected, we found in January zinc prices rose quite strongly. It was up 7.5%, and then it reached the high of $3,350 a ton, which was a multi-year high. The last time zinc prices had gone to that level was sometime in March, April of 2023. And there is hope of in metals production, primarily because of strong growth in production in the but very strongly is that demand is likely to remain quite subdued because China is not yet out of its real estate crisis, and China is the mover and shaker of industrial metals market, as we all know, and the real estate crisis still continues. Talking about it openly, but it certainly does continue, and therefore demand growth fairly subdued, and therefore I felt even at that time that those high prices, 3,300 plus, were most unlikely to sustain. And now, with energy inflation, interest rate expectations, etc., there is obviously of a small correction, and therefore both on the supply side and on factors are working. One sense is that on the LME, refined zinc would probably be traded around $3,100 plus minus $100 in the next 2 quarters, Q2 and Q3. There is nothing dramatic that's going to happen as far as zinc is concerned, is my reading. Now, yesterday, the International Study Group came up with a report. There they are talking global demand for refined zinc forecast up 1.3% to 14 million tons. And then China usage is expected to rise. It rose last year, is expected to rise again this year also. Whereas on the supply side, after declining for about 3 years, world zinc is expected, availability is expected to increase 0.8%. No, it increased by 4.8% in 2025, but that was mainly influenced not by China, but ex-China, really speaking. And in this year, according to the study group, of course, output is expected to rise by a modest 0.3%. Okay, that's the situation. And they also said that the world refined output will rise by about 1.4% to come very close to 14 million tons. But on balance, when you look at the demand side and supply side dynamics and forecasts and possibilities, on balance, the demand for refined zinc is expected to slightly exceed the supply by a small amount, and therefore one shouldn't be surprised if there is a deficit in the international market, a very small deficit though. But we must remember one thing: whenever a market is in surplus, the hedge funds or speculative funds will keep off the market. That is, the long only funds will keep off the market. But when a market is in deficit, there is a tendency for speculative capital to come into this market. And when speculative capital comes into the derivatives market, there is always a tendency to have the flow of more speculative capital and speculative funds, which will inevitably have an exaggerated price impact. And therefore, that's one note of caution that I thought I must issue for the benefit of all the participants. I think with this, the 15 minutes to me allotted by Bina comes to an end. Of course, I'll be available. I'm open. We can discuss this matter even further. Well, let me also say before, while I say thank you very much, there is a disclaimer which I always give. I'm not a trader. I'm no trading interest. I don't hold any trading position in the physical market or in the derivative market. And with this, let me say good luck. God bless you all. Thank you.